What is up, people? Welcome back. So officially Xpeng Motor will be traded in the Hong Kong stock market from July. The company will complete another primary listing in Hong Kong. Because the company is in the stock market for less than 2 years, it is not eligible for secondary listing. The company have to fully comply with the regulation from both the US and Hong Kong stock market. And I think because of that, the company will lose some freedom. There will be restriction and the regulation will be tighter. And also I think the company have to pay more in registration fees and annual fees. However, I think there is a massive advantage particularly for Xpeng to be listed as a primary listing in Hong Kong stock market. And because of that, I think the company will go multiple times higher in terms of valuation than right now. So of course in this video, I'm gonna explain why I think it is huge opportunity for Xpeng to be listed as a primary listing in Hong Kong Stock Exchange, and I've got some strong evidence to support my opinion. Before going on, I'm not a financial advisor, so anything I say on this video should not be taken as financial advice. You have to do your own research before you invest. However, if you're new to the channel, if you like what I get for you, make sure you hit that red subscribe button right now and a big thumbs up for the YouTube algorithm. Do not forget you can get a free share worth up to £100 using Trading 212 if you are from UK or any other European countries. The link is down in the description. Go through the link, register, and then deposit at least £1. You get one free share, I get one free share, which may be worth up to £100. Investing early is the way to become rich. So you can see that unlike secondary listing, Xpeng stock will be eligible for inclusion in the series Stock Connect program. That means investor in mainland China will be able to buy the shares through a trading link with Hong Kong immediately after its market debut. So because of the series Stock Connect program, people from mainland China will be able to buy shares of Xpeng through Shanghai Stock Exchange and Shenzhen Stock Exchange. So you can imagine how excited will be the Chinese people to be able to legally buy the shares of the company from their own country. And of course the company is one of the most popular in their country. And currently the Hong Kong stock market is flooded with the mainland investors. Right, you can see there Hong Kong stocks swell as market eats up Chinese cash. The city's stock market is at 20-month high and trading volumes have hit records thanks to mainland investors. The article was published in January this year where the Hong Kong stock market was at peak. Analysts and investors say mainland investors will likely become more influential in Hong Kong. Mainland investors pour money into Hong Kong at record rate. Chinese investors are buying Hong Kong equities even as financial markets are spooked by a proposed security law. Mainland money is flowing into Hong Kong Stock Exchange at unparalleled pace, offering support to a market at the center of rising tension between Beijing and Washington. Eligible investors, which can range from brokers to insurers or individuals with at least $70,000 in their trading accounts, acquired $35.3 billion of the shares so far this year, the most for the period in data going back to 2017. So the money flowing into Hong Kong stock market from mainland China is in a record pace, alright, like never before. In 2020, there was $87 billion invested from mainland China, but just in January this year, there was already $30.3 billion invested from mainland China. That is crazy, alright? Back in February, the index was already up 28% year to date. That is insane. But then after the index crashed because of the concern over the Chinese security law, and now the index is up over 7% year to date. And I think this is particularly big news for the Xpeng investors and the company itself, because a survey completed by Hong Kong Investment Fund Association shows that more than half of the percentage wants to invest in renewable or new energy. Because they know the future is green, China is the leader, there is no chance Chinese people are not aware of this. The HKIFS survey found that new energy, biotechnology and internet were the top 3 sectors favored by the mainland investors. Some 63% said they would like to invest in new or renewable energy, followed by 57% in biotechnology and 48% in internet-related stocks. Banking and finance, traditionally favored by investors, ranked 4th at 34%. Industrial and retail were the least preferred sectors at 14% and 13% respectively. The Hong Kong Stock Exchange is the 3rd largest stock exchange in the world, behind New York Stock Exchange and Nasdaq. Back in March, when we first heard about 3 Chinese EV companies, Neo, Xpeng and Li Auto were planning to list in Hong Kong stock market, then I made a video about that news. Back then, Hong Kong Stock Exchange was at 4th place, but now it is up 1 place to 3rd position, beating the Shanghai Stock Exchange. The city is full of billionaires and millionaires. We know that it is one of the biggest financial hub in the world. So the company reported they're gonna offer 85 million new shares. That means some shares dilution. Probably that's the reason why Xpeng stock fell a little bit yesterday, of which 80.75 million shares will be for the international investors and remaining 4.25 million shares will go for the Hong Kong IPO. at the price of 180 Hong Kong dollar per share, but I think this will change in the last trading day before the listing. And after just 4 hours, its Hong Kong share offering is fully subscribed. It basically shows that the level of interest, willingness and excitement in Chinese people about this company is right here. Now it is confirmed that the demand for Xpeng shares is very high, and according to a post from South China Morning Post, the retail portion of 4.25 million shares could go up to 17 million shares. And if that will be the case, then the company could end up raising a lot more capital than the currently projected $2 billion. You can see there, the retail portion of 4.25 million shares may be increased to 17 million or 20% of the total offering, depending on public demand and a so-called clawback mechanism. The final price will be set on Wednesday at the lower end of the international offer price or at 180 Hong Kong dollar, whichever is lower. I think the company being listed in the Hong Kong market will also eliminate the threat of delisting from the US market. It will also be available for the mainland investors, and I think they will definitely invest in the future of their own country. Electrification, the biggest EV market in the world, China the leader. The company currently has about $5 billion worth of cash position, but I think we need more capital because we're still growing. The company is still in the early phase, still investing aggressively. We're building 2 more factories, each of them producing 100,000 vehicles per year. Amazing. So because the company is available internationally and from now on legally in China and Hong Kong, one of the biggest financial hubs in the world, I think the valuation of this company will go skyrocket in coming years, probably 200 to 300 billion in the next 3 to 5 years. That is amazing growth, right? Right guys, finally it is time to close the video. Thank you very much for watching till the very end. If you are still there, make sure to like and subscribe and invest safely. See you in the next video.